Boom. Boom. I'm going to be frozen like always. There we are.
Good morning.
NASDAQ.
NASDAQ.
Where's your face? Your face isn't even on the screen.
Mine's not?
No, you're like above the camera.
Well, it's because my stuff is broken. How's that?
Oh, no. I got it. I got your face. Good morning, everyone. How y'all doing today?
Cheers to everyone.
Cheers, cheers. We got Mark in the chat, Joseph, Ramon, the regulars. We're going to let people filter in. We got 11 likes already. You guys know the drill. Smash that like button. Hit that thumbs up button. Get it out of the way right off the bat. You know, make it easy on everyone. You don't have to hear me talk about it. We'll let people filter in. It is 8:48 a.m. on, what is the date today? The 5th day of October, 2023. Jack, we got Nemo, we got Caveman, we got El Jefe. Good morning, good morning. Make sure you hit that like button on the way in. Subscribe to the channel. Tell your mother, tell your uncle, tell your aunt, tell your nephew, tell the college roommate. Subscribe to the channel. Follow us on the socials, Clover Trading IO. We're here every single day, 8:45 a.m., Monday through Friday. We had Wine Wednesday last night, which I thought was a pretty great episode. We talked about a lot of different tickers. We kind of went through a lot of the themes for the last couple years from 2019 all the way to 2023. Stackalope says they're new here. Welcome in. We have a very easy and simple policy. You're allowed into the show. We do it for free here every single morning, so long as you hit that thumbs up button. It's all we ask. Keep the show free. Keep it running. Keep management out of our contact list. We hate hearing from them when it comes to the YouTube stuff. All right.
Great.
Me and Huddy today have a webinar for 4Leaf at 11 a.m. Huddy's on his phone.
Sorry, yes, we have a webinar today for 4Leaf subscribers at 11 a.m., correct?
Okay, we do 2 to 3 of those a week. That's where you really get the in-depth education. That's where we answer your questions. So you can ask us anything. You can always ask us anything over in the Discord room. If you want to get into that for a 4Leaf subscription trial, there's a 7-day trial, $7. For 7 days, you get access to everything on the website, everything we have to offer for 7 days. Then you get to make the decision if you want to stay.
Dom,
Spoiler, I think you're going to want to stay. Ask me a question. Get her going.
Why do we do so many webinars? Why do we do a webinar every week? In fact, 2, but me and you at least do 1.
You mean like together?
I mean, why do we do webinars every week? What is the benefit here?
Benefit is staying up to date with everything going on in the market, getting your individual questions asked. I know I did not take advantage of that enough when I was a beginner, just because I felt like my questions weren't worthy and I didn't know enough. And to some degree that was true, but I probably could have gotten ahead by interacting with the community more, networking, talking to other aspiring traders. But we really do it just to kind of show exactly what we're doing, why we're doing it, when we're doing it. And on a week-to-week basis, over the course of a year, you can really get to understand the why that we're doing everything that we're doing, and then you can implement it yourself. A lot of the traders that follow me and you and do the webinars with us don't necessarily trade the same exact patterns, but there's a lot to be learned from people who have been in the pit, who have gone through the struggles of learning how to build an account, learning how to grow a trading system. So yeah, that's what I think it is. And then just being able to have that, personal feel of a tighter community, asking the questions that you want answered and getting really in-depth questions answered, in-depth answers over the course of an hour. Sometimes we go over.
Nice.
Getting to hear all of our perspective. You get to hear from all of us throughout the week.
Definitely.
All right. Let's get into it. We got people filtering in. That like button has been smashed. Let's talk about stocks. Where do you want to start, Huddy? The gapper list this morning is a little... Well, that's not right.
It's unimpressive.
It's unimpressive. The biggest gapper is ORTX, but that is an acquisition, so it's at $16 because that is the value of the acquisition. So that stock is just going to sit there all day at $16 because they told you the value, so it's going to go there and stay. The only real gapper that I see on our list before we talk about stocks we've been seeing and talking about is WNW. This is stock that kind of ran after hours yesterday into this morning. I couldn't find news a second ago, but believe it or not, another cheapie, low price stock bouncing off its lows. Let's see if there's any resistance overhead. Pretty giant dump at the end of last year from the $3 area down to 20 cents. What do I have on here? Yeah, no real volume that it's done anywhere in the past since that dump. Gonna take, most likely, if you have news, you can share it with me. I wasn't able to find any after hours yesterday. If I can go to Yahoo real quick. I don't see anything. Gonna kind of take the same approach. We got a 56 million float, medium dilution, 15 months of cash left. Some convertibles at 50. Those aren't registered. So no real dilution. Going to take the same approach that I have been taking with all these low price gappers. Let them do their thing. Let them run out. They're too cheap to just short for a gap and crap. And their charts aren't really set up for something for me on day one that I'd be really all that interested in buying. We've seen a lot of them pretty much fail on day one. Some have come back from that to go on moves. We'll talk about a couple here in a second. Yeah, if you have anything other than that, it's kind of just an avoid for me. Kind of blab volume, blab price range. Just not all that interesting to me.
It's probably a low float. I'm kind of just looking through the news to go back to December 20th, 2022 to see what caused that death drop from 2 to like what it looks like $1, less than $1. That's generally what you see with like really horrendous situations. So kind of being aware of whatever that was is like most important to me. And I mean, we're really far away from that level. So like, can the stock spike? Sure. But without really understanding what I'm really trying to look at, like I really don't have much of an interest with this kind of, bottom bouncer either.
Yeah. El Jefe says I'm sick of the cheapy theme. You know what? I love them. When, we had TTOO, we've had NVOS is moving. We'll look at that in a second. When they set up and give you actual patterns, they're really awesome because you have situations where you can make 40, 50, 60, sometimes over 100% in just a matter of days on these things, which can really move the needle in a small account without, because you don't need a lot of, you don't need big positions to make good money on these type of trades. They're very similar to the OTCs we used to trade back in the day. So for that aspect, but just in terms of day one runners, they don't have the same appeal that a low float stock, biotech at $5 a share that's gapping to 12 does. It doesn't bring the same sort of eyes, interest, and attention. So for those reasons, generally tend to avoid them on day one.
But yeah, and unfortunately, like the thing with the market is you don't get to choose like necessarily what to trade. Like the market's going to show you what's hot, what's not. Like I could not like biotech, and then this whole like past 2 weeks has been terrible. Or I could not like cheap tickers, in the past month and a half has been terrible. But for the most part, like what Dom said, like the ones that actually set up with structure and daily chart patterns, like they're same business as usual for the most part, especially if they're extended and you can actually short them. I think the most annoying part is like trying to swing and be early for whatever breakout you think may or may not come from this cheap price range. And yeah, when you're sitting in a 5, 10, 15 cent ticker for multiple days or weeks, believing in some kind of thesis, that's where I think you're going to run into a lot of problems with the cheap range, because bad things will happen. Reverse splits will happen. Just dilution will happen, right? Like these are penny stocks for a reason.
Yeah, they're at the bottom of the barrel when it comes to when we say most small caps are crappy, and that for the most part they're just trying to meet their endpoints, make some money for themselves, and kind of screw off on the shareholders. You're looking at the worst of the worst when you're talking about stocks in the 10 to 30 cent range.
It's like, again, you don't get to choose what's hot and what you get to trade. The market, if you're a small cap trader, kind of dictates a lot of the flow of volume for the most part. So I think it's just about maybe reorganizing an approach to whatever is hot that week, that month, whatever it is, and just having the right approach, right? If I'm sitting here trying to buy every 15-cent ticker that's gapping for the past 2 months, like yeah, I'd be exhausted of penny stocks too. But the reality is, even though we talk about them every day, like Dom and I rarely, maybe there's a couple that we've kind of gotten infatuated with over the past 2 months, but it's rarely that we really even push buttons on these until they actually set up. So,
all right. So speaking of what's hot, what do we got? Talk to me about something. You wanted to talk about ICCM?
I mean, it's a gapper as far as what's on my watch list. It's just ticker again following that hot biotech theme from earlier this last week. This was a big percent gainer that gapped up. I don't have the chart up. Where is it?
I got it. It was a red doji candle.
Yeah, so big percent gainer that gapped up on huge volume, held the lows almost perfectly, just kind of very Femi-esque, like Beanox, like literally all of them, Pixie. So many of them just held the lows and then came back to their highs. I'm not saying that this one will, but they did PR this morning more about their breast cancer results. Therefore, it was up 20%. Thing for me here would be like, is this PR some attempt to sell shares into people who are going to chase the PR, or does the PR actually have some kind of strength and reason to it, and does it hold up? Right now, it looks to be the latter, that anyone that chased this into a buck is getting sold into. And that's just like patience, right? Like just as a trader, like you see a PR and you immediately buy, like that's usually not the move at all. But giving it time to like prove itself, like, okay, PR, okay, volume, okay, price action, does it hold levels? Are dips being absorbed? Like, is there real interest here, or is this some kind of facade that, gets you to try to buy? And you have to understand that, like in small cap, a lot of the times they are the facade. It's like, buy my stock so I can sell into you. Paying the news articles, paying this person, paying that person. It's all, a lot of it is just criminal activity to some extent. And just knowing where to place yourself within that dynamic is where you can achieve good results.
Yeah, and I'll just kind of piggyback that. Talking about that theme that we've seen started with Femi. We had BNOX do similar. We had Pixie do similar. As themes morph and as people start to recognize the same thing, more people are on the same side, and you tend to see worse and worse outcomes. Like, whereas Femi broke out and went on a nice multi-day run off of that similar pattern. Then, Pixie was able to break those highs, but didn't continue. BNOX didn't quite make it to its highs. And so you kind of see the evolution of these. I'm not looking at the charts. My apologies. There's Femi. Pixie.
And that's the thing too, like of all these breakouts, like they're all super nuanced. Like, there's a reason that Femi worked better than Pixie, which, and there's a reason that, Beanox is still consolidating and not breaking out. Like there's so many nuances to learn about. That's kind of a hat tip towards the weekly webinars.
And that's also, those are the building blocks we talk about that. It's kind of like the baseline that you have to understand with trading, which is why for the most part, we're so much more technical than we are fundamental, is because, the reason Beanox didn't go on and break out is because distance from the breakout level, right? That much more resistance overhead on an all selling day. Like it's going to take a lot more effort for a stock to go from 270 and break out over 640 than it is a stock to go from the 1 to 115 area and break out over 160, right? And that's just understanding price action, support and resistance, volume, and interest. And then the theme kind of comes in last, which is where you get your conviction, where you kind of get your idea of, am I going to click buttons or not? Okay. What do you want? Where do you want to go next? We have a few tickers we can talk about. You want to talk about NVOS? Kind of how all that kind of plays into it, where you kind of talk
really
about
a
low
gapper.
Nah. Well, we don't really have any gappers. Where's the gapper then? You had another one, Femi?
Femi is technically gapping up. On no news, though. I think maybe there is news. I haven't checked. I think this is just kind of screwing over anyone who swung short. But I could be wrong. Let's check.
And I think we mentioned this. I don't know when it was. If it was yesterday morning. Let me just look. Yeah, I don't think this is news. They said yesterday that they're going to showcase Femiseed at the annual meeting of the American Society of Reproductive Medicine, but I don't think that was the reason for the gap. I think that was during market hours. Kind of why I wasn't interested in buying this for a first green day or for a bounce wasn't necessarily that I didn't think it can bounce. Most stocks do go through a stage where they don't go straight up and they don't go straight down. So after you get extended moves to the upside and extended moves to the downside, it's usually followed by some sort of correction, right? In this case, the reason, not besides it just being overextended and overvalued, the reason it died when it did was more fundamental based, right? They did an offering with an HCM, I believe. and that kind of kills all momentum. It kills all hype. It kills all of that chasey nature where, even anyone with a Twitter account can find out that bad news happened with Femi. So they go to the next ticker and they're done buying and chasing it. And so that leads to an overcorrection to the downside where you have just straight selling for multiple days. So it is likely that these stocks bounce. But when it comes to first green days and predictability, I don't find an edge in buying stock. I don't like to fight uphill battles. Trading is a small enough edge as it is. The margin for error is so small. The last thing I want to do is be swimming upstream more than I have to. And I feel like fighting against extra supply is not the game I want to be playing. In this instance, I wouldn't have really ever been able to nail this anyway because, yesterday, what's it gapping down? 15 or maybe 20%, right? So I don't really want to be buying stocks that red on the day for first green day. So this one didn't set up that way in general, but just kind of wanted to give my 2 cents on why I'm not interested in the bounce, but why I'm not surprised that it is bouncing. So I know you mentioned in the last 2 days, Huddy, that Femi would be on bounce short watch. What are those levels you're looking at? And if you want to just broad spectrum idea, what you're looking
Yeah.
for.
So the first bit of dilution that I think hit the market would be at that $3 mark where it opened up the day of that the dilution PR was released. So that's where I think you're going to have some kind of hidden supply, excess supply, more supply than demand. Of course, if for whatever reason everyone's super excited about buying this stock today, it could overwhelm. And I think that's what they'd want it to happen. I think the more liquidity, the more buying pressure that they get, the more that they can sell. And again, the goal for an ATM is not to sell it as low as possible. You want to sell it at decent prices to not obliterate your stock and make everything look, terrible for future financings or whatever it is. So $3 is that first level I have in mind. Not something I just want to oh, it's at 3, I'm just going to short, because again, their whole idea is to extrapolate liquidity. So how do they set it up in a way that brings in a bunch of liquidity over 3 is kind of what I'm thinking. And there's 2 ways that I go about this. It's either into some kind of parabolic short, because I think that's where the most liquidity will be, versus some kind of resistance level that's made in the past, and or the easier route for me always is just letting this go on a multi-day run and then treating it like a bounce short if it does get back into the 354 area, just as a number 6 pattern. So 2 ways to go about it, but both probably going to be patient for what I want to see instead of just forcing my will on it.
That comes with experience as well, and just understanding that when the stock is hot, when it's trading the most volume, when it has the most eyes on it, when you have shorts getting squeezed, when you have people willing to buy and chase high day breaks, that's when you're going to see the most volatile moves in the shortest period of time. When you see the giant breakouts and the big parabolics, that's when you see the giant first red days and the 20, 30, 40% red days. Once you start to hit day 2, 3, 4, 5, and you start to separate yourself, the volume starts to drop off. The interest isn't there. People are focused on ICU or other stocks. The moves become slower because they have to work out the longs. They have to work out the shorts, supply and demand. And so that's why you kind of hear Huddy talking about more patience, not necessarily, I'm going to short it at 3, I'm going to cover at 180 on the same day. It could happen, but in reality, it's just understanding market dynamics and how these things play out by having seen, the life cycle of a penny stock play out hundreds of times.
Yeah. And I remember reading the dilutive PR. I don't know, it was a while ago, but I remember reading it and it's saying something like 16 or $19 million worth. So there's a world where, they have some to sell. There's the world where they got a lot of it out on that first red day, given that all day it sold without a single bounce. And again, like I said yesterday, they can easily turn the faucet off and turn it back on. And it seems like for now the faucet is off, and I want to look for an opportunity where I think the faucet may very well be turning back on. And that's where I think the edge is. It's playing off the financing more than anything. And so
wonderful. All right, we'll take one of your guys' questions and then we'll wrap her up and head on over to the Clover room. Do you guys ever try to anticipate a sector Momo? For example, mushroom stocks have been getting beaten down.
I would say every time I try to anticipate sector Momo, I lose. And any time that I react to sector Momo, I do really well. So for instance, the AI sector, right? The way I did really well in that sector, both times it kind of ran, was I allowed the sentiment to gauge when I should start, buying whatever I was buying oftentimes that meant that the main runner AI was literally breaking out, trading excessive volume, huge percent gain, all of the interest. And I was like, okay, maybe some other stocks might feel a trickle down effect. But if you don't have that dynamic in the market, then most of these companies are horrid, illiquid, low float penny stocks that will most likely go a lot lower than you expect. And it's really hard to, and I don't know how big the account is or anything, but like it's really hard to control risk when you're buying something when it's completely illiquid and the levels aren't real and there's no interest. Like you don't have a time frame. It's just margin of error. You're very prone to making a costly mistake in that circumstance, and tying up buying power, whatever it is. So I really don't like the front load sectors. I will play a sector if we have, again, breadth, right? Like some kind of indication that it can trickle down. So like with the mushroom stocks, absolutely not. Like not for me. I'm not saying it's wrong. It's just not for me.
Yeah, I can't remember a time when I've ever done really well at that, even on sectors that I know really well, like the weed sector, the Bitcoin sector. It is just so hard to know which ones are actually going to work. It's really hard to create an actual plan like that you trust because the plan might be 6 months out. Um, it locks up buying power. You see red numbers all day because if the stocks aren't going, they're generally going to continue fading, and that gets really, really stressful, especially if you start to struggle and you start to look at red. You start to see a whole account that is just bleeding because you're in like 25 mushroom stocks. What I've learned over the years, and this is something a lot of beginners will bring out, they're like, you see that global news or something about the elections or a bill is about to get passed. And, I try to remind them, and it's usually reminding myself, we react. Our job isn't to predict what's going to happen, to assume where the market's going to go. It's to sit back, wait for price action that makes sense to us. And then if we have extra conviction from a hot sector or a bit of news or a global landscape shifting or a bill getting passed, then that just adds to maybe how much size we take or how much conviction we actually have on the trade. And for me, it's just realizing it's the same patterns that I trade every single day that show up during sector momentum. It's just about waiting for those patterns to show up. And usually that means for me, I'm missing the first run. And I'm totally okay with that because then I have a list of 5, 10, 15, 20 tickers that are now potentially in play going forward the next few weeks. And that's where I'm going to make my money. So my goal is to sit back, wait for the stocks to show up, just like I normally would. They'd come up on our scanners. They'd show up on multi-day runs, put 2 and 2 together, say these all stocks all belong in this basket of weed stocks, of Bitcoin stocks, of mushroom stocks. And then I trade them the same way I would, with maybe a little extra layer of conviction depending on the current market environment, the overall market, how willing people are to bet their money or chase stocks. All that stuff goes into it, but it really just comes down to the same patterns. And predicting all that has never proven to work really well. And just reminding myself I am a trader, not an investor. But all right, that's a good close for today. If you had a question and you want to get it answered for sure, get on over in the Clover room, copy and paste it over there. We'd be happy to type up a nice response for you. 7-day trial link in the description. If you want to get over there, if you do it this morning, you'll get access to me and Huddy today at 11 a.m. We have a webinar live on clovertrading.io. So we look forward to seeing all you 4-leaf clovers there. And yeah, we'll see you guys tomorrow morning to wrap up this week, Friday the 6th at 8:45 a.m. Thank you guys for being here. We will see you in the morning.